Friday was one of those sessions for NIO where the narrative, the technicals, and the sentiment all seemed to click at the same time. The stock closed the week on a high note, surging 8% to finish at $4.81, that's a gain of 36 cents in a single session. After a string of choppy trading days, it felt like the kind of move that gets people talking again about whether the $5 range is just around the corner. And there's more to it than just a random burst of buying. Let's break down exactly what happened, why NIO moved the way it did, and what this might mean as we look ahead into next week's trading. One of the big catalysts came from the analyst side. Morgan Stanley came out with a reaffirmed buy rating on NIO and raised their price target. Now, you could say, analysts adjust ratings and targets all the time, but this one landed at a moment when NIO's story was already starting to get some fresh legs. Their new target price, converted from RMB, might not sound like a moonshot, but it's enough to frame upside potential that the market clearly decided to take seriously. Morgan Stanley's reasoning wasn't a mystery. They pointed to the debut of the Onvo L90, NIO's three-row SUV under the new Onvo sub-brand, as a significant sales driver. The L90 isn't just another EV in NIO's lineup. It's positioned in a way that expands NIO's reach into the family SUV space, which is a huge and competitive segment in China. The Onvo brand itself is part of NIO's broader mass-market strategy, alongside the smaller Firefly brand, aimed at pulling in a larger customer base while still leveraging the company's strengths in design, tech, and battery swapping infrastructure. What's interesting is that the Onvo L90 isn't just a concept anymore. We're talking about real pre-sales activity, real customer engagement, and showrooms already showcasing the model. For investors, that's tangible. The pricing strategy, offering both traditional purchase and battery-as-a-service options, has been seen as competitive, particularly against rivals like Li Auto. That's important because this segment of the market is fiercely contested, and consumers are very sensitive to value and practicality. Beyond the analyst note, there was also a clear technical component to Friday's rally. NIO has been hovering below some key resistance levels for a while now. One of those was around the $4.80 mark, which happens to line up with a 38.2% Fibonacci retracement from a previous swing. Traders watch these levels, not just for fun, but because when you break through them with conviction, it can bring in momentum players and algorithmic buying. That's exactly what seemed to happen here. Once NIO pushed past that zone, volume kicked in. We saw nearly 68 million shares change hands on Friday, well above recent averages. That combination, fresh bullish news, a technical breakout, and higher than usual volume, is the recipe for a move that can have some follow-through. It's also worth noting that NIO's delivery numbers and growth story are still in the background supporting the move. The company has been steadily improving delivery volumes, not just for its core NIO brand but also preparing to scale its Onvo and Firefly offerings. The battery swap network, something that remains unique in the EV space, continues to grow and gives NIO a strategic advantage in customer convenience and brand loyalty. While these developments don't always drive day-to-day price moves, they do build the foundation for why investors might stick with the stock longer term. Now, let's step back for a moment. An 8% gain in a day is impressive, but we've seen plenty of cases in the EV space, and with NIO specifically, where a big single-session pop gets partially retraced the next day. So the question heading into next week is, was this just a short-term burst, or is it the start of a sustained push higher? There's an argument for both sides. On the bullish side, you've got the fact that NIO closed right near the session high, at $4.81 against an intraday high of $4.82. That's a sign the buyers were still in control into the close, and they weren't rushing to take profits before the weekend. You've also got that psychological level at $5 that could now act as a magnet if the momentum continues. And importantly, this rally wasn't sparked by vague hype, it had tangible catalysts, a major analyst upgrade, a flagship product debut, and technical follow-through. On the cautious side, there's always the risk of short-term traders flipping their positions on Monday to lock in those quick gains. In addition, broader market conditions can't be ignored. If the macro backdrop turns risk-off, whether because of economic data, interest rate expectations, or geopolitical headlines, high-beta names like NIO can feel the pinch regardless of their own story. One thing I'll be watching closely is whether we see follow-through buying in the early part of next week. If NIO can consolidate above that $4.80 breakout level, it strengthens the case for another test of $5. If it falls back below, then Friday's rally might look more like a one-day wonder. Also worth keeping an eye on, short interest. NIO has often been a target for shorts, and a sudden move like Friday's can trigger some covering that adds fuel to the upside. If short interest data starts to show a drawdown, it could explain part of the rally and give clues about whether it can keep going. Another angle here is sentiment. For much of this year, sentiment around Chinese EV stocks has been pretty subdued. Headlines have been dominated by pricing wars, competitive pressures, and questions about profitability. What Friday demonstrated is that there's still a pocket of investors ready to pile in when they see a credible growth story, and the Onvo L90 launch might be that story for NIO right now. From a longer-term perspective, what excites bullish investors is the idea that NIO's mass-market strategy could finally be turning from theory into reality. The premium segment has its limits, and if NIO can successfully tap into a broader audience without diluting its brand identity, the addressable market opens up significantly. The Onvo L90 could be a proof of concept for that approach. There's also the fact that NIO continues to invest heavily in technology and infrastructure, two areas that have historically given them an edge. The battery-as-a-service model remains one of the most innovative in the industry, and as EV adoption grows, the convenience of battery swapping could become an even bigger differentiator. That's not just a Chinese market play either, it's something that could eventually be exported if regulatory and market conditions allow. So, heading into next week, the big picture looks like this. NIO just delivered one of its best single-day performances in recent months, backed by concrete news and technical strength. The $5 level is now firmly in sight, and the stock has the kind of momentum that can attract both retail traders and institutional interest, especially if follow-through buying shows up early in the week. At the same time, it's important to keep expectations balanced. This is still a stock that has seen its share of volatility, and big moves in either direction are part of the game. But if you've been following the NIO story, the evolution from premium EV maker to a more diversified player with mass-market appeal, Friday's rally feels like a step in the right direction. It's a reminder that while sentiment can swing quickly, the fundamentals of product execution, delivery growth, and strategic positioning matter. If the market continues to respond positively to the Onvo L90 rollout and analysts keep reinforcing the upside potential, NIO might just have the momentum it needs to turn this from a short-term spike into a more sustained trend. For now, Friday's action was a clear win for the bulls, and it's given us plenty to watch as we head into the new trading week.